Hello, I'm Nick Nassad. Welcome to this Friday edition of CMS Forex News. Today is December 21st. The yen fell today as risk appetite for carry trade returned this session. The Wall Street Journal reported that Merrill Lynch may get a cash infusion of $5 billion, boosting stock markets. U.S. consumer spending rose more than expected last month, and the cost to borrow dollars and euros fell. The dollar-yen pair broke out of its range that had been trading in all week and reached above 114 by 2 p.m. New York time. The return to carry trade boosted the pound, which had been falling this week. After reaching a low near 223.50, the pound-yen pair climbed 275 pips to trade near 226.25. Other currencies used for carry trade, such as the Australian, New Zealand, and Canadian dollars, also advanced against the yen today. The euro-pound pair saw a steady climb this week as investors and traders added bets that the Bank of England would cut rates further in 2008. Dovish meeting minutes, lower consumer inflation, and a record current account deficit point the way to further easing in monetary policy to stimulate growth. The pair traded 100 pips higher than at the start of the week, which is a record low for the pound since the euro's inception in 1999. In fundamental news, retail sales in the UK beat expectations, showing a 0.4% growth in November. The gains were led by an abundance of discounts prior to the holiday shopping season. An index of services showed the 3 months to October at their lowest level since September 2006. In Europe, the current account showed a surplus of 1.3 billion euros for October, lower than forecasts, but the figure for September was revised up to 1.9 billion euros compared to the originally reported 0.6. A second report showed industrial new orders in the Eurozone rebounding from negative territory and gaining 2.5% for October. Retail sales in Canada increased 0.1%, better than expectations of another drop. Gains were led by auto sales. The monthly measure of GDP for October also performed better than expected, climbing 0.2%. And in the U.S., personal spending showed the biggest gain in 2 years in November, as it increased 1.1%. Incomes grew at double the pace of October, increasing 0.4% in November. The extra income and discounts for pre-holiday shopping were important factors in the better-than-expected results. The core PCE price index, a favorite measure of inflation watched by the Fed, went above the 2% target level. It posted a 2.2% change year-over-year for the month of November. Lastly, the UMich Consumer Sentiment Survey improved from its 2-year low to post a 75.5 in the final version for December. Last year, the survey measured 91.7 at this time. Those in lower income brackets are feeling the pressure from higher fuel, food, and utility prices, while homeowners are dealing with falling housing prices. Trading will be light next week as the markets will be closed for Christmas. When the market reopens, the U.S. will release data on durable goods and the Conference Board consumer confidence. Japan releases its end-of-the-month barrage of data, including CPI, industrial production, retail sales, and an employment report. The week, as well as the year, will be fittingly wrapped up by releases of housing data from the UK and the US. And this ends another week in the Forex markets. Thank you for joining us here at CMSFX.com. We will return on Wednesday, so have a great weekend and happy holidays.